It's all sunshine and rainbows again. Michael Saylor has saved us. Apparently, he sold his precious MSTR stock, so he's diluting the shareholders for this ugly fiat currency just to raise US dollars in order to pay for STRC. Now that's the preferred equity. That's the official term. The unofficial term is debt in disguise, and it should trade at $100. It fell all the way down to 73 cents on the dollar, but now it's recovering again. Now, this is not the first DPEG. It's the most severe, but it's not the first one. Let's have a look at what happened in the past when we restored the peg. So that's those vertical lines. Have a look at the Bitcoin price. BTC fell quite sharply, which caused doubts regarding MicroStrategy related assets because the company is highly levered. It's got a lot of Bitcoin exposure, and that exposure grows over time. Then once Bitcoin started to stabilize and slightly recover, that's when STRC went back to $100. That happened twice. And this time again, Bitcoin slowed down in its fall. MicroStrategy, or now just called Strattegy, is becoming a bit more conservative and just raises US dollars. And so things seem to be on the right path again. Now let's have a look at the same points in time for MicroStrategy relative to Bitcoin. So that's now MSTR's relative performance to BTC. It tended to underperform very consistently. Then we got the STRC DPEG. Again, Bitcoin stabilized. MicroStrategy relative to Bitcoin also stabilized. Then came the second DPEG. MicroStrategy underperformed again, and here we are today. What I find interesting is that MicroStrategy's relative performance to Bitcoin tends to be less volatile compared to the Bitcoin price directly. As in, we might want to use this ratio as a gauge of general sentiment in crypto. With Bitcoin, we might be fooled that we turned around over here, but MSTR relative to Bitcoin still continued to fall. This ratio could be a good indicator of how much risk appetite there really is. Right now, it's still too early to say that this negative momentum has turned around. The fundamental problem with Michael Saylor's strategy is that he can only lever up his position more when the Bitcoin price is high, because that's when his creditworthiness is the highest. All of his capital is in BTC. When Bitcoin's price is low, he can't really buy much more. Since MicroStrategy is a levered bet on Bitcoin, when Bitcoin goes down, MSTR goes down even more, which then makes selling common stock not profitable, right? The Mnav turns negative. And now with the recent DPEG of STRC, we can also see that this debt instrument, right, the preferred equity, also is not a source for buying more Bitcoin anymore. Once the Bitcoin price falls enough, STRC will DPEG and MicroStrategy cannot buy more from that entity either. Now here's a chart of MSTR in green versus Bitcoin in orange since MicroStrategy started to buy Bitcoin. So this drives home how MicroStrategy is more volatile than Bitcoin. It goes up and down more than BTC. But here's something I want you to notice. MicroStrategy started to buy Bitcoin when its price was $10,000. Since then, BTC appreciated by 500%. Right now, it's at $6,000. We would expect that MicroStrategy, when it's so levered, that after a 500% price increase in the underlying asset, should at least be up 1,000%, maybe even more, but it's not. Yes, there's still a tiny bit of outperformance, but that outperformance is in no relation to the additional volatility that we've got. Had we decided in the year 2020, instead of buying MSTR stock, to just buy Bitcoin on leverage, right, 2x leverage, maybe we took out a personal loan and then bought Bitcoin with it and thus doubled our stack. If we had done that instead of buying MSTR, we would have gotten the same kind of volatility in our portfolio, but we would have also outperformed much more. The risk to reward for getting into MSTR has not been worth it. Now, why is that? Again, it's because Michael Saylor has to buy when Bitcoin's price is high. When the collateral is worth a lot, he can borrow more against it. He can buy more, and that's why the number of BTC that Strattegy holds jumps up whenever the Bitcoin price is high. So Saylor is not yet selling Bitcoin aggressively. He just occasionally dabbles into this a bit. The reason actually why STRC DPEG'd was because Strattegy sold 32 Bitcoin in order to pay for the dividends. The company afterwards bought thousands of Bitcoin, but that couldn't restore the confidence. But the fundamental issue is that structurally, the way the system is set up, Saylor cannot buy low and sell high. He can only buy high And then the question is, will he sell low or will he just wait through the bear market? In the past, he was able to just wait it out. The question is, will he be able to do the same going forward, given that now the leverage is much, much higher? Have a look at this blue line. That's the average cost basis of Strattegy. How much did Strattegy on average pay per Bitcoin? And that's currently at $75,000. So the company is currently in net unrealized losses. It bought Bitcoin on average for a higher price compared to where it currently is. And that's quite an achievement given that Strattegy started buying at $10,000 and the Bitcoin price went up to $60,000. There are not that many investors that are that bad at timing the market that when an asset goes up like this, they are still in net unrealized losses. The problem is simply Michael Saylor has to lever up when prices are high. And we as individual retail investors don't have to follow that playbook. We of course want to buy when it's very hard to buy. We want to buy when nobody is interested in crypto. And we want to sell when Michael Saylor has to buy. There are many ways to determine potential bear market bottoms. And of course, none of those approaches is perfect, but I do think they are at least useful to a degree because many people look at similar models. And so because those models point towards similar kinds of price targets, we tend to also see demand when Bitcoin is cheap enough. It's all about what's the potential upside versus what's the potential risk. When Bitcoin has only fallen by 50% from the all-time high, then the anchor point is a 2x, right? If we just go back. But when Bitcoin has fallen 75% from the all-time high, then it can potentially do a 4x. And then the potential risk to reward looks much more attractive. What we're seeing over here, that's Bitcoin's long-term price chart relative to the US money supply. Bitcoin has been created as a hedge against monetary debasement. And up until today, it has been a very good hedge. So long term, from cycle to cycle, Bitcoin tends to outperform the monetary debasement. We actually gain purchasing power cycle over cycle. Now this chart also gives us a potential bottom. Again, this is no perfect approach, but it gives us an idea where we might potentially turn around. An additional 22% loss from here, so Bitcoin going slightly below $50,000. That's what this chart is implying. Let's connect the tops. It's evident that from cycle top to cycle top, Bitcoin tends to outperform the monetary debasement less and less. And that makes sense. Bitcoin gets larger, it takes more capital to move the price, and the big gains that went to the early adopters when there was a lot of risk, they are of course gone. But still, from the last cycle top in 2021 to the recent cycle top, BTC still outperformed the monetary base by 71%. Now money devalues by 6.8% per annum, right? This is how quick USM2 grows year over year. If you don't achieve 6.8% per annum with your investments, you are falling behind. That's the real hurdle rate. I do not believe in the consumer price index because consumer goods get cheaper to produce over time. There's technological progress. If we want to measure how we're doing relative to the rest of the economy, we have to grow our capital by at least 6.8% per annum. And Bitcoin, cycle over cycle, has been able to outperform that debasement. And that's again by 71% over the course of a cycle. So that's an average annual performance of 14%. And yes, this could go down further, but even if it was to fall to say just 50 or even 40% outperformance cycle over cycle, it's still a good long-term bet. What we are currently seeing with this bear market is nothing out of the ordinary at all. And Michael Saylor should have prepared for that. But again, he has set up a system that unfortunately can't take advantage of Bitcoin's volatility. For MicroStrategy, it's not good to have those crashes in Bitcoin because it erodes trust, even in supposedly stable instruments like STRC that should be trading at $100. Now, I still believe in the core message of Bitcoin, that it can preserve purchasing power because its inflation rate is lower compared to the fiat inflation rate. Fiat expands by 6.8% per annum. Bitcoin supply expands by 0.8% per annum. So that would imply that the US dollar price on average should go up by 6% per annum, right? 6.8 minus 0.8. However, we see that the performance is much higher because Bitcoin still sees adoption. But that's not the only effect. Yes, it's great that the tokenomics of Bitcoin improve and that in 2 years, instead of 0.8%, we will see 0.4% supply expansion. That's not the main effect though. Have a look at the overall supply of BTC. How long has that Bitcoin been held on average? And let's just look at the long-term holders. So all the holders that have held Bitcoin for at least 5 years. That's this over here. This went from roughly 20 to 30% over the course of roughly 5 years. A bit over 30% of Bitcoin supply has not moved for the last 5 years. The tendency is growing, and it's growing by roughly 2 percentage points per year. So really, this is the much stronger effect here. We do have mining and we do have an expansion of Bitcoin supply, but this chart here, this shows not the number of Bitcoin that haven't moved. This chart shows us as a percent of all of supply, how much Bitcoin did not move. So this is already considering the Bitcoin mining. In other words, Bitcoin is becoming a scarcer and scarcer asset over time. This is an almost monotonically increasing chart. Yes, every now and then we do see few little blips, and that's what makes the headlines, right? A whale that has been holding Bitcoin for 13 years is cashing out $1 billion. Yes, those blips make headlines, but the overall long-term trend is clear. This is growing over time. Here, let's zoom into that chart. Do you want to hold an asset that has more and more of its supply getting stashed away over time? Or do you want to hold something that can expand with a little bit of effort? Property can always be built. Gold can always get mined. Stocks can always be created through new companies. But here is the elastic supply of Bitcoin. I still believe in the fundamental story. But of course, marginal returns are going down. But just because I believe in the long-term macro does not mean that I think we will turn around in Bitcoin anytime soon. Let's work with the scenario that there will be more and more doubts around MicroStrategy and that STRC depegs even further. And that then, in order to stabilize the price, Michael Saylor has to dilute MSTR even more. Then MSTR underperforms Bitcoin even more because maybe Bitcoin falls a bit further and MSTR is just a levered bet on Bitcoin. Let's say the spiral out of control. I think this is a realistic scenario. In the past, the market had to be in net unrealized losses. The average market participant had to see red in their portfolio before the bear market turned around. Currently, the average Bitcoin investor is still in slight gains. Even after the 50% drop, the average profit per Bitcoin investor is at roughly 9% now. The average cost basis is at $53,000. And in the past, we tended to fall below that cost basis with every single bear market. How much did we fall below? By roughly 10 to 20%. So if we take the same anchor point, we could see Bitcoin go down to 45K. It would still be within reason. I know it already feels like we are already at maximum pain and there is not much attention on crypto at all. I make those videos while not so many people are watching, but I make them because they are especially important during times like this. Here is the interest over time in Bitcoin. How much is Bitcoin getting searched on Google? And it's close to the all-time low. But the activity on chain is not yet close to an all-time low. This is the realized hodl ratio. It measures how active is Bitcoin traded. When this is very high, then there's a lot of short-term traders. When this is very low, it's mainly the long-term holders that are transacting. And currently, the market is still cooling off. And every time before, we tended to turn around in the green area. Now, we could make the argument that maybe from one bear market to the next, we tend to see slightly less cooling off. Still, we are nowhere near a potential turnaround. We have to at least dip into the green area. And so, yeah, you might have noticed there is still this little bear costume in the background. And you might have noticed how the avatar of this channel is me wearing a bear costume. I'm still overall bearish. We are still in a bear market. I've been bearish for several months and many people were complaining, especially when things were still looking very positive. That does not mean that I'm permanently bearish. There are times when Bitcoin is cheap enough and the risk to reward justifies going contrarian. But those times, I believe, are not now. I think something systemic has to break first. And maybe that's going to be accelerated selling by MicroStrategy or maybe by other treasury companies. We have been doing quite well timing the Bitcoin market. So in October of last year, we started a Bitcoin trend following capital pool. While Bitcoin lost, we made slight gains. Measured in BTC, we more than doubled our stack. If we analyze this, we are up measured in Bitcoin by almost 200%. Our backtest, and that's how this works, our simulation of buying and selling gave us 115% per annum. So this is on the website, linked down below. There's also live analytics. So you can have a look at how we determined our trend following strategy. We checked for the best golden and death cross, and here is the performance over time of that backtest. There's also a leverage optimization. Feel free to click through the numbers. Feel free to also watch this video that explains everything. If you want to get into this Bitcoin trend following vault, currently there's roughly $3 million in there, then feel free to check out the premium membership. It's currently $159 per month. You can just sign up a single month and then deposit your funds and then get out of premium again. Of course, I hope that you will stay. I hope that you will get value out of the content. But if you don't, feel free to just deploy your capital and outperform Bitcoin that way, right? It's all about doing better than buying and holding Bitcoin. There are plenty of people that brag about their great returns during a bull market, but then those people tend to get completely wrecked during a bear market. It's important to be realistic. When momentum turns around, we want to be out. When momentum is positive, then we want to bet on this heavily as well. I believe it's not the optimist that's getting rewarded, it's the realist. Now, if it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. See you next time. Cheers.